Hey, what's going on, YouTube family? In today's episode, I have a really special one for you guys today. If you clicked on this video, you probably know a thing or two about the company. If you don't, that's okay. That's what we're here for. And even if you are an expert on Corsair Gaming, which is the company we're going to be talking about today, I guarantee there's a few really good things that I'm sure you're going to be able to take away from today's episode. There is a lot to cover, so stick around, and without any further ado, make sure you smash the like button, and if you haven't already subscribed, subscribe, and let's dive into today's episode on Corsair Gaming. Let's go. Alrighty, so let's talk about the Corsair stock price a little bit, and then we'll dive into the more nitty and gritty about the stock and whether or not it's good to buy right now or not, right? So when looking at the stock price, as you guys can tell, it's sitting around the $32 range as of today. And obviously, if you took a look at the price, from September 23rd, 2020, when it IPO'd, to now, it's at least went up 100%, a little over 100, 124% to be exact. Now, that doesn't paint the whole picture because the stock has been as high as $52 here back in November 24th. So it went literally from 14 bucks to around 52 in a matter of just 2 months. Now, obviously there has been some insider selling since then, and for good reason, because when you make a lot of money in a very short period of time as a big investor, or even just individual investors, it's not a bad idea to take some profits. And that's exactly what happened. And we'll talk about that a little bit later and show you exactly how many shares and who sold. But for those of you who aren't familiar with the stock, let's look at exactly what they sell. So obviously you can see from their website here, they sell gaming gear, streaming gear, PC components, gaming PCs, software, and a whole lot more. So if you're looking to, buy a new computer or, maybe just upgrade what you currently have, they are a great option. Not only that, they also have headsets, and they're very well known for their keyboards and mice as well. Pretty much anybody that I know that is a professional gamer has at least one or two Corsair products, if not their whole build around Corsair. But overall, if you want to go check out their website, just go to Corsair.com. But the reason why I'm so excited about this stock and a lot of other gaming stocks in general is because the gaming market has seen an absolute insane amount of growth over the last 10 years or so. So we're going to take a look at that right now. So from 2012 to now, right, roughly 9-10 years, we have seen a growth of 11% per year. So we're talking about adding over $100 billion in roughly about 10 years time to an entire industry. And I think that the growth isn't going to slow down anytime soon. If anything, it's going to progressively accelerate. Not only are there more YouTubers and Twitch streamers, but the space for competitive gaming has also grown quite drastically over the last few years as well. And it is my belief, and a lot of other analysts' belief, that this space is not going down anytime soon and will continue to dominate across the board, across other sectors. So next, let's look at a little bit of the Corsair metrics, because that's exactly what you're here for. So one thing that I think you should note is that their valuation is about 50% undervalued, a little more than 50%. It looks like around 59.9, let's just call it 60% from what their fair value of the stock is, which puts its fair value at around $79, which is over a double up from today's value. In all honesty, I could see Corsair getting to these valuations very soon, but unfortunately, I don't decide that, and neither does Corsair really. At the end of the day, a lot of it comes down to what the investors want to see, but also what they hear on the media. So next, let's talk about future growth, because we did see in the previous slides that the future growth for gaming is around 11%. That's what we've seen, in the past with PC gaming. But analysts are saying that, their future growth is somewhere around 21%. This is based off of their earnings growth. And in my opinion, I can definitely agree with this. If anything, I think this might go even higher, because as you saw from 2020 to 2021, right? Just from March to March, we've already seen a growth in earnings from 780K to over $140 million in earnings. Now, the revenue looks like it was around 1 billion, 1.1 to be exact, and grew to 1.9, which is still significantly higher than this 20% that we're talking about here. So not only do I think we can get there, I think we can definitely beat that out, especially when you're talking about the 5-year average going forward. Because as gaming accelerates, maybe there will be one bad year for Corsair, for example, and that might influence the stock price down. But if Corsair has the next 4 following years be absolutely outstanding, then that will push the average a lot higher than this 21%, even if we do have a bad year, like I mentioned before. So this is obviously just speculation, but we do have a piece of metric that we can look at to kind of guesstimate exactly where we're going in the future based off of previous results. So let's look at that now, which is the past performance. So as you can see, the historical annual earnings growth has been around 66.5%. Now, I'm not saying that we're going to continue seeing that, but I definitely could see somewhere in between the 20 and 60% figure. So we're looking around the 40% is where I could see the growth continuing. And if we see higher than that, fantastic, right? The stock price will show that it's worth a lot more. And if we continue to see this growth, but the stock price doesn't move, obviously that will just push the stock into the more and more undervalued category than it is today, which is what? Well, it's just a bigger opportunity for us investors that believe in gaming to get in and make some buku bucks down the road. But let's talk about their balance sheet, because this is something also very important, and they do have quite a bit of debt. Now, in my opinion, debt isn't very important in the short term. Now, in the long term, it is extremely crucial, because if the debt bubble is increasing and you're not growing the market that you can grab as far as products go, and maybe your revenue starts slipping, all those factors can play a big role in the actual company metrics, which ultimately lead to having a really bad run company and then possibly even bankruptcy. Now, I don't think that's going to happen with Corsair Gaming, but I'm just saying that is a possibility with if that were to happen here, where the debt gets out of control and it gets above, long-term assets, inventory. But we've seen with other companies like Tesla, for example, where the debt was really high and is still to this day pretty high. And thanks to investors, they are still in business. And not only that, but they've also started to become more profitable. Now, Corsair Gaming, on the other hand, has some pretty good earnings to show for their progress. So we're going to take a look at that in just a second. And I just had to show you the debt because this is not something that's concerning as long as they're putting that debt into new products, new developments, growing their customer base, and really growing their brand worldwide. And that's what they have been doing. So the ownership of the stock, obviously, as you can see here, there has been some insider selling. Mostly one company has been selling here, and then also two individuals sold about 3 to 6 months ago. Now, this doesn't obviously show a huge red flag. I consider this more of a yellow flag. I see this as a possibility for the people that are selling the stock to take some profits, especially if they bought their shares pre-IPO or even at IPO, because obviously this stock has gone up and up since then, and for some really good reasons. Obviously, with the pandemic, we've seen an influx in gaming, and in addition, a lot of people are trying to make an impact or a career shift through virtual types of content, and me being one of them. I would appreciate a smash of the like button if you're getting value from this, and if you haven't already, subscribe, because that really helps out the YouTube channel and the YouTube algorithm as well. But let's move on to what's, I think, really important with ownership is the top shareholders. Now, if you can see here, Eagle Tree Capital owns 58% of the company. And not to take away from them, but the top 25 shareholders own 71% of the entire company. Now, that is a little bit alarming, but let me soothe your soul a little bit, because even though Eagle Tree Capital owns 54 million shares, and again, 58% ownership, they are not likely to sell because they're actually down 12.47%. Now, obviously, they're not going to take some profit because, well, they don't have profit. But that doesn't mean that they're not going to sell at least some of their positions, because that is an opportunity to maybe, cut down on some of their taxable income as a corporation. Sometimes it's good to report losses if, during that same year, you made a lot of profit. Now, I honestly wouldn't mind them selling a position, but because they do own 58% of the stock, they have a lot of say whether the stock price goes up or if it goes down. Now, I don't think that they're going to sell at a loss. That's not the smartest thing to do. If anything, they could wait for a 12% increase and break even, or the more likely scenario, they believe that this stock is going to go up in the very long term, and they're in it for that long term. So that way they can save a lot of money when it comes to taxes. And in addition, well, the stock is still undervalued. So of course, it makes more sense to hold onto the shares. So those are some things to look out for to make sure that, hey, well, Eagle Tree can sell a lot of their position. BlackRock holds 2.9%. Andrew Paul owns 2.8%. Knowing who are the shareholders of the stock that you like is very important, because then you can watch out for headlines and also pay attention when a particular company buys the stock or sells the stock, and that will help paint a better picture for you as an investor for what to do when these particular events do take place. So next, we have the number of employees. Now, usually I don't look at this. I mean, for myself, I do when I do stock analysis, but typically I don't point this out in most videos. But today I wanted to look at that because they've actually grown quite a bit. And this is just from June 29th of 2020 to December. So we're talking about 6 months time. They added 400 new employees. So for a company that's worth $3 billion, 2.9 to be exact, adding 400 new employees in 6 months is a huge feat, especially when we're talking about a company that already has 2,000 employees. Adding 400 to your fleet is a lot of extra employees. That's 20% more, in fact, in just a short period of time. That tells me that they're up to something big and that they're only at the beginning, at the forefront of their future potential growth. So let's talk about the stock price. And here on TradingView, I have their chart pulled up if you want to take a look at this on the screen if you have a moment. So this is where we've seen the high all the way up here at 53. And as you can see, it's kind of been on this down trending pattern. Now I'm going to draw a couple lines for you guys here. So if we take a look at this line here and we add this line here as well, you can kind of get a picture of where this stock is headed. Well, it's consolidating in this zone here and has been for quite some time. Consolidation is key for pattern recognition and seeing where the trend might go. Obviously, once the stock can close above or below this trend line, then we will see a breakout depending on the direction that it goes. So if it breaks up above this line and can close, then it will probably continue that trend for quite some time, make new highs, etc., etc. Now, if it breaks below, then technically speaking, it's a bearish sign and you want to set a stop loss and take your money out. This is obviously from a trading perspective. If you're long on the stock like I am, this is nothing that you should be worried about. This is just something to be aware of, right? In my personal opinion, if we can continue seeing these bounces here as high as we've had here, I could definitely see us starting to form a new trend. And what I'm talking about here is one that looks like this. Now, I don't think that we're going to see that very, very soon, but it is possible. I mean, we're talking about just retesting back to the highs of 53, maybe not as soon as here. I mean, unless we get some crazy volatility and volume, but I don't think that that is likely. But I could see a slow trickle up into this area here and retest these levels of like 35, 36, 37. So from a trading perspective, where we're at right now is actually very healthy. Now, if we do break below this point, I could definitely see us getting back into the mid 20s, 26, and then possibly even 21. I have a hard time seeing this stock honestly back in the 20s again, unless we're talking about, the high 20s maybe for a day. But more likely, I could see the stock just kind of bounce around, go sideways for maybe a couple more weeks, maybe a couple more months even, and then retest these highs again. And if we could see a breakout above that, obviously we're probably going into the fair value zone of $70. But that also depends on what the overall market does. So take all of this with a grain of salt. Just because one company is forming this pattern, that doesn't mean that the big trend, meaning the whole entire stock market, or at least the S&P 500 or the Dow Jones, aren't forming their own bearish or bullish patterns that will definitely impact stocks like this one. What the overall market does is actually more crucial than what a particular stock is doing, no matter what the revenue is. Sadly enough, the headlines actually make that a fact because really that's what people pay attention to more than what the actual fundamentals of the stock are. So if you're watching this, give yourself a pat on the back because you're paying attention to the fundamentals. That's what's actually important long term, and reading headlines is only important in the short term. Really, in fact, the only thing that makes it important is that there are people paying attention to it. So next, let's look at their financial performance. This is the quarterly, and we'll really compare March 2021 to March 2020 here. So the revenue back in March of 2020 was 300 million. The net income was a measly 1.2 million. And their net cash on hand was negative 1.46 million. Now, fast forward 1 year, and we can take a look at March 2021, which is a revenue of almost twice as much. In December, it was a lot closer to being a 2 times multiple, but we're looking at March here because this is the year over year that's important. The net income has grown from 1 million to 46.7 million. So that gives you a good idea of where they're going. I think the annual shows you a bigger picture. So we'll briefly look at that. As you can see, we've just been on a steady incline ever since 2016. That's as far as we can go back here. And 595 million, that grew in 2017 to 855 million, then 900 million in 2018. 2019 was the first billion-dollar revenue that we saw here, with still a negative net income, which is just signifying that they were part of a very, very heavy growth phase in 2018, 2019. And in 2020, we grew to 1.7, almost $2 billion in revenue, and a net income of 103 million. This is what we like to see, especially from a company that has had the opportunity to be a dominant force in gaming. So good stuff from Corsair. Everything that I've seen so far from what we've looked at has been very, very positive. Not a lot of things that you can really dog on this company for. Now, obviously, if the valuation of the stock was sitting around, 5, 10, 15 billion, then you might say, well, the stock is heavily overvalued, but we just haven't had that yet. So now I know you might be asking, and wondering, would I buy this stock today? Now, I would personally feel comfortable buying Corsair anywhere under $50. So yes, I'm continuously buying it. And not only that, but I will continue buying it as long as we have growth in the gaming space. Until we see a slowdown, I just don't see why I wouldn't be buying some of the biggest leaders in gaming. And we're talking about AMD, Nvidia, other chip manufacturers, even Corsair, companies like Amazon, Google, all these companies that have a big foothold in gaming. Even Apple is now growing their arcade in the App Store. There is a big, big reason for that, and that's because gaming isn't going anywhere. Now, you also might be wondering, where do I see this company going in about 3 to 5 years? Since we are long-term investors, that's kind of the horizon that you should be looking at. Well, in my personal opinion, I could see the stock getting as high as a valuation of 15, 20 billion without a sweat. All it needs is to continue what it's been doing, the gaming market to continue growing like it has been, and the big, big catalyst as well is for the media to pick it up and showcase really what this company has been all about. And honestly, that's a fairly reasonable market cap for this stock in the next 3 to 5 years, especially based off of its growth. I mean, we're talking about a company that's worth 3 billion now and is underpriced. It should be priced somewhere around 6 to 7 billion already. And we're talking about current metrics and not even future metrics. So 15, 20 billion is fairly reasonable. If we're talking about the bullish case, well, then you could talk about numbers like 40 and 50 billion. That would put Corsair at an overvalued state, and that is not healthy. And that is where I would definitely start taking money out of Corsair. If you want to know how, I just dollar cost average out. That's typically been my strategy, and it's worked wonders for me. And I think Corsair has a lot of room to grow as it grows its fundamental business around the world. And another thing that you should pay attention to is how much more accessible gaming has been in different parts of the world. Now, obviously, a lot of first world countries, second world countries have access to phones and computers of some sort, and they like to participate in gaming. But I think what we're going to see is a huge increase in those countries, but also in countries where it hasn't been very accessible to have a computer maybe in the home or a family computer that people could use for gaming. So with this increased demand and growth, we are only going to see a higher price for these computer companies, and hardware and software companies like Corsair continue to dominate. So hopefully you guys got a lot of value from this video. If you did, make sure to smash the like button if you haven't already, and don't forget to subscribe so you don't miss any awesome content like today's video. If you haven't already gotten your free stocks from Robinhood, WeBull, M1 Finance, Public, any of these companies, and you're curious to try their platforms, it would mean the world to me for you to go check them out using the links down in the description below. They're absolutely free to try, and you can get a combination of stocks valued altogether of up to $3,000. So if that sounds interesting to you, go check out those links down in the description below. Thank you all so much for watching, and without any further ado, I'll see you guys in the next episode. Peace out.